Hello traders, Gary Wagner here. It is 12 noon in Honolulu, 6 o'clock in New York on Tuesday, 2nd day of October, 2023, and this is the Daily Report for gold and silver. Gold has traded lower now for the 7th consecutive days, trading with lower lows, lower highs, and lower closes. The primary culprit behind the demise of gold pricing is the Federal Reserve's extremely tight monetary policy, in which they are going to keep rates elevated for a longer period of time, and they have halved the cuts next year from 4.25% rate cuts to 2. That is what they're projecting. Take a look at the 30-year bond. It is a massively large green candle, one of the largest gains on a single day we have seen in quite some time. We did get one back on the 21st of September, but for the most part, this is an exaggerated high. The second thing you want to look at is we have had a golden cross. A golden cross is when the 50-day crosses above the longer-term 200-day. You can see that it appears as though there was a golden cross here. However, when we compress this chart, what you'll see is that it was a golden cross of sorts, but the 50-day had been above the 200-day and just moved into the same price point and then began to widen. The actual beginning of this golden cross occurred in February of 2022. The other major market that is taking gold lower is dollar strength. You can see that just recently, back in September, Thursday, September 21st, we had a golden cross in which the 50-day moved above the 200-day. Today, we had the highest level of the dollar index in quite some time. In fact, we have to go and compress the chart to see the last time this occurred, and that happened back in this area here, which is the latter part of last year, November or December of 2022. As long as the dollar continues to strengthen, bond yields continue to grow, we can expect there to be pressure on gold. And the scenario for gold on a technical basis does not bode well for the bulls. As I said, we have seen 7 consecutive red candles, each containing a lower close, a lower high, and a lower low than the previous day. I also draw your attention to the fact that a nominal decline in gold prices will create a death cross. A death cross, of course, is when the 50-day moving average crosses below the 200. Now, what is very alarming to me is where we would have to look for technical support. And to do that, we can use some of these Fibonacci numbers, but it's past the 23. The 38 is down at 1739. This is a long data set, but it's these two lows that came in February and March of this year, and they came in at a price that is much lower than current pricing. We are talking about a price level of about $1,815. The fact of the matter is, if we do get a death cross, that will create major chart damage, and we've already had substantial chart damage that could move gold lower, and I don't see any technical support until gold reaches just above $1,810. Yesterday, silver declined by a tremendous amount. Look at the size of this red candle. Today, it made the lowest low in quite some time. We'll go back historically in a second and look at it. Although it did close higher than the opening price, it did trade to a lower low and a lower high, as well as a lower close. And to go back to the point in time in which silver traded to these lows, we really have to go back to this candle that occurred in March of this year. The only thing that we can say that differs about silver compared to gold is that it is a doji, and a doji indicates either consolidation or a pivot point. We'll have to see if a pivot point is possible. We are certainly in oversold territory according to the MACD. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.